What every medical resident should know about home buying.
But first, let's hit it! Hi, this is Alan Victoria Pinder. Welcome to our podcast and channel.
And if this is your first time in our channel and a podcast, please subscribe in our channel and also get notified when we put a new podcast and video for you.
Honestly, I get calls and emails and texts all the time for 252-327-3357 for people just like you looking to ask questions about the home buying process, and we're here to really help you. So with that, let's hit it.
Let's hit it. Therefore, those of you that you just finished your medical school
or you just got into residency.
Medical residency.
Yay!
You have so many questions because you might end up doing residency in another city or another town, and you were wondering always when you wanted to move what you were asking to.
Or you have this assumption to where maybe I should just rent because I'm not going to be there forever. I don't have a lot of income. I have debt. I don't have a down payment. There's cost to ownership.
Exactly.
I'm only going to be wherever I'm going to be for 3 to 5 years, maybe 6. I don't have time for these maintenance costs. I don't get any tax breaks if I own. Just budgeting wise, I should be thinking renting. These are all these general thoughts people have when they've never bought a home. They're now going to residency. And there's no cash, no job, no credit, high DTI, debt to income. These are all just fears in there, but we're not thinking long term and how it actually helps you, because there's special programs just for medical residents.
Therefore, you have all these questions and you say, oh, it's easier for me to just rent instead of buying. No, but also look at this statistic.
But we're wrong.
And we wanted to say that you might think wrong. No, that's what we wanted to talk.
It's just the thoughts for you to think about. So, number 1 is going to be that down payment. And now, if you're in our area, I might recommend for that maintenance, we look at new construction, because then you don't have to worry about maintenance for a while. And then we're also then going to say, what about that down payment, right? Money that I don't have. In fact, I'm in debt.
Like, for example, if you're talking about the $200,000 and you're thinking, oh, they told me that I need 20%. That is like a $40,000 I need for the down payment.
But that's traditional. There are programs specifically designed for medical residents.
Exactly.
And now we know that you're in a lot of debt. Typically, you're going into debt with $230,000 to $296,000 worth of student loans, and oh my God, more debt with the house. But don't forget, you can sell this house and make money with it. So let's talk about that down payment. There are specific loans to where you have a 0 down payment.
And what is that loan is?
They're physician mortgage loans.
Physician mortgage loan or the doctor mortgage loan.
Right, and a number of different banks offer it. We can tell you where to go around here for one of these type of things, and they have fewer restrictions than those conventional loans.
Yes, therefore, who is eligible for this type of the loan?
Not all doctors. All doctors, really. All doctors, also dentists, podiatrists, osteopathy, veterinarians, dental surgeons, but not nurses and not physician assistants. So you have to be specifically becoming an MD of some sort. And
therefore, not all of the medical professions really are eligible for this type of the loan.
And not all of them do optometrists. We can tell you around here in Greenville, North Carolina, who does it for eye doctors, but not all of them do it for eye doctors. We just kind of want to throw that out there too. So if you have questions, let us know. Now, let's talk more.
Yes, let's talk about more. Therefore, we wanted to say that this doctor loan, what kind of the pros and cons it has.
Absolutely.
Because everything has a pros and cons, and we want to list it for you. That, for example, the pros, the first thing that we wanted to talk about is the pros of these doctor loans. Basically, you can get high max loan amount. Like if you submit all of your document that needed, we're going to go through it. You have some lenders up to $2 million and some lenders up to $5 million you can get the loan.
Here in Greenville, if you're talking new construction, we're talking $300,000 and brand new. So I mean,
therefore we are not talking $2 million.
We're not talking millions, just so you know. But your credit score does go up as a result of you owning a home.
Yes.
Your debt to income ratio will actually go down because you again own a
therefore,
home.
my wife is just jumping to another thing. I'm gonna go into pros. The pros was the second pros was availability. Therefore, based on the recent reports that many of the bankers and mortgage loans they establish and publish outside, they said almost 47 states they have these doctor loans available. Therefore, wherever you are, we are located in North Carolina. We have in North Carolina the doctor loan. The number 3 that is the pros, the possible to get a cash out refinance. What is that?
So let's just say you've lived in the house 2-3 years. Now you're going to move out. And you can do a couple things. You can keep it and then do a cash out refi where you're going to tap into that equity and pay off those student loans that you might have.
Exactly.
So you're going to pay off that remaining debt. Some banks allow you to refinance up to 80% of your appraised value, which means you would get more money out of that house that you're owning.
Exactly.
And getting rid of that debt faster for you. Again, another thing I wanted to say with the home appreciation, even if you decided to stay in the house, your home appreciation is something that you're not thinking about, but it's just by living in a house, you are making money. I know, crazy thoughts, right? So even if the interest rates go down or go up, it's not really about that because the market always will move up and down all the time. It is about what is best for you. And in 3 to 5 years, I would say probably everything is going to be better than it is right now. So, I was thinking.
Therefore, the number 4 that I wanted to talk that maybe I must have put it in the number 1 is your down payment.
Yes.
Therefore, your down payment could be 0 to 10%. Depends that the duration that if you are like 10 years from
or resident, it's resident 0.
Resident 0, you can get 0 from your training 10 years. In this time window, you are between 0 to 10 years, you are eligible for 0 up to 10% down payment. This depends on your situation. And if you are between 10 to 15, this is gonna go to 10.01% for the refinance.
But don't forget, at that point, you're probably already a doctor, and now you might be looking at conventional loans as well. So
therefore, now we're gonna shift to the cons of the doctor loans. What are the
biggest one is going to be timing. Timing. Banks can offer 100% time financing, but you are in your studies. You have a lot of things you have to do at a certain time, and you're spending a lot of time at the hospital, so you're not thinking I have to go shopping at all these houses now. So that is why it's really important to think about it right at the beginning so we can get you there, so you can just focus on your studies. And this is, again, not for nurses and not for physician assistants. We don't make the rules. These are just the numbers about banks.
Therefore, not all of them is covered that we address it. And number 3 is the potential for borrowing too much, because we said that the loan could be up to, depends on the lender, goes to $2 to $5 million. Therefore, if you get a really high big amount of the loan, you might increase the balance of your debts that you don't want it to have it.
Right. So always think reasonable. You can always upsize to that $2 million or more after you've graduated, but you can be in a reasonable home that's going to appreciate, and that is really your best option for you. I think we did the DTI. So let's move on. The student loans don't count against you in the mortgage loan, right? That's something we didn't mention. In these doctor loans, student loans do not count against you. And they can close within 90 days before you even start your new job as a resident.
Which is super important.
So you can go shopping. If you're starting in September, you can shop in July and August, find the place, move in, and then start your job in September. If you're starting in January, we can close in October, and then you start in January. So there's many reasons there. And now let's talk about how we get to these doctor loans and houses that we can help you with.
Therefore, the first thing is talk to your real estate agent. That in the state of North Carolina, you can talk to us because we have the local lender that they can help you.
And if you're not in North Carolina, we'll direct you. It's okay.
And the second thing is you can prepare your paperwork. What we need to prepare as a paperwork?
The banks are going to want things like, you don't need to send them this, but we have your stuff ready to give to the banks. Pay stubs, tax returns, employment contract. If you have a visa or green card, what do you need?
Even if your visa and green card or the H-1B visa is still you're eligible. Basically, they want 15% down payment, which is 85% LTV. And also you need to also give them what you need to provide.
Your medical degree
from your university.
And again, it has to be acceptable here. So they offer all the loan types, the 30 years.
What type of the loans now they offer?
All of them. The fixed, the ARMs, all of them. But you have to have all your documents ready. So we hope this was helpful. We can't wait to help get you into a medical residency and help you get into a home that way it is yours and you have peace of mind and no crazy neighbors next door. I mean, that's important too, right?
Talk to you soon.
All right, bye.